Hi everyone, this is Hazem Sultan, real estate advisor with remax Crest in Vancouver. Today I'm happy to be joined by our friend Reza Sabour, senior mortgage broker with TMG The Mortgage Group. Thank you so much, Reza, for making the time to be with us
Thank
today.
you, Hazem, for having me. It's a pleasure to be here and join you today. And yeah, I know we have a lot to talk about. So
Absolutely. Before we dive into the mortgage questions, why don't you give us a quick intro about yourself and about your business?
Absolutely. So my name is Reza. I've been a mortgage broker for coming up on 10 years as an independent broker. I work with TMG The Mortgage Group, one of the largest brokerages in Canada, and actually the #1 full-service brokerage in Canada as of 2022. So very pleased to be there. And yeah, I've been basically in the financial services business for just over 20 years. I started with the banks for about 12 years before I went independent as a broker.
Fantastic, fantastic. So without further ado, let's dive into some of the common questions that we get asked. Essentially, one of the most common questions is, what is the difference between working with a mortgage broker and a mortgage specialist or someone at a bank?
Very good question. So we get this question all the time, and it's really important for the public to understand the differences between a bank employee mortgage specialist versus an independent mortgage broker. So first of all, I would start by saying the word broker is actually a word that you're only allowed to technically use in BC if you are licensed independently. So a branch mortgage specialist technically is not a broker because they don't have that independence from the institution they work for. So the main difference with us is that as an independent broker, I have access to many lenders. I don't work for a specific lender, and I don't work for any lender at all. So it essentially broadens my reach for access to products and services, but it also takes away that inherent bias that I may have if I was to work for one employer and sell one suite of products.
Right, that makes a lot of sense. So essentially, if someone walks in to their bank, or actually this ties into to our next question. Let's say someone already has an existing relationship with their bank. Why would they sort of explore the option of working with a mortgage broker when they already have that sort of existing relationship with their bank? Is there any specific?
Absolutely, yeah, and we are all about relationships in this business as well. So sometimes if you do have an existing relationship with your lender and you're happy with their suite of products, maybe it's your second time having a mortgage with them, by all means stick with that choice if that is what makes sense for you. What an independent broker does is they give you an unbiased perspective of comparing apples to apples or apples to oranges in some cases, and being able to give you perspective on whether or not the product you potentially are going to go with in your bank is the best product for you, or are there products out there that could be better that your bank obviously cannot inform you of because of that bias of the mortgage specialist working for that one institution. Our job is to be independent, is to be unbiased, and a lot of the times I'll review what you have compared to what's out there, and if what you have is better, I'll just tell you that straight up, and if we can get you something better elsewhere that meets your needs better, then we have that flexibility to do that.
And you know what, there's another point that a lot of our clientele sometimes tell us is that they're afraid of getting their credit pulled multiple times. Like if they're working with a mortgage broker, is that the case?
So your credit definitely has to be pulled in terms of getting you a pre-approval or reviewing all of your financials at the financial institution that's ultimately going to give you the mortgage. It's a large part of your application. However, yes, absolutely to your point, if I was just a regular consumer, let's say I took the day off work and I went on to West Georgia Street where all the banks are, and I went applying for pre-approvals on my own with every bank, every single bank I visit is going to pull my credit report. And if I have subsequent credit pulls in a short amount of time, Equifax is going to penalize my credit score because then it looks like I'm credit seeking, and maybe I've been declined and I keep jumping around to different banks, and that's how they will perceive that. With a mortgage broker, upon giving me all of your documentation and permission and consent to start working on your file, I do pull your credit one time to build your pre-approval. If it's within 30 days that we're approaching lenders with that information of the pre-approval, often that lender will use the credit report that I've already provided, or they may pull one other time, but they won't be pulling again until you have an accepted offer. And sometimes if that accepted offer came really quickly within 30 days of the pre-approval, they won't pull again at all. So this does protect your data, it protects your privacy, and it also protects your credit score.
Fantastic. So in terms of working with a mortgage broker, what are the type of lenders that you guys have access to?
Another very good question. Yeah, so we have three categories of lenders in Canada in general. As a consumer, you have access to two of them on your own. With a mortgage broker, you have access to all three. The first two are the banks and the credit unions. So you technically don't need a mortgage broker to visit a bank or a credit union.
Right.
However, also sometimes we do have special relationships or promos with certain banks where we do get a little bit of a better rate or better services. Plus you get advisory services with a broker, unlike a bank specialist who may or may not be there in a few years when you go back with some issues with your mortgage potentially.
Right.
So the first category are the banks, the second category are the credit unions, and the third category is a lender type that you can only access through a mortgage broker, and those are called monoline lenders. So
can you give us an example of those monoline lenders?
For example, First National comes to mind. They're Canada's largest monoline lender. They're actually so large that they are larger than every credit union in Canada combined.
Right.
They manage just over 120 to 130 billion dollars of mortgages under asset management. They're across the country. They've been around for over 30 years.
And there's something that you mentioned as well, that they're actually backed by TD, is that correct?
Yeah, so this is one of the best things about monoline lenders is they're behind the scenes, usually either owned or funded by a bank. So there's always a bank involved somewhere. In the case of First National, their primary institutional investor amongst other investors is TD Bank. So a lot of their underwriting policies are actually similar to TD's underwriting policies. And in fact, in the mortgage broker channel, First National underwrites TD Bank's mortgages. So, so you can see the affiliation is quite strong. We have other lenders like MCAP and RMG, whose primary investors behind the scenes are Bank of Montreal and some other lenders. And so this is very common with monoline lenders, but it gives the consumer that protection of knowing that the investor behind the scenes is usually a large bank.
Right, right. So it's nice to have those sort of options, but when it comes to actual rates, do they differ between A lenders? You mentioned the banks and credit unions, Vancity, for instance, or monoline lenders. Do they vary? Or?
Yeah, they definitely vary. I mean, when we're looking at the A category, that falls under the major banks, credit unions, and monoline lenders. The A side, rates are similar, but there's always going to be promos and specials or certain niches that one lender will have versus another. For example, monoline lenders have a niche category called insurable mortgages, whereas the banks only have two types, which is insured and conventional.
Right, which is if you're putting 20% down?
Exactly, yeah. So if you're putting less than 20% down, it's an insured mortgage backed by government insurance. If you're purchasing with 20% down or higher, it's a conventional mortgage. The monoline does the same thing, but they have a third category, which says if the home is under $1 million, if the amortization is 25 years or less, regardless of how much you put down, you could put 20%, 30%, 40%, doesn't matter. It falls into what's called an insurable category, which actually gives us the same rates as insured mortgages, which is a mortgage where if you were buying with like 5% down, which traditionally has the best category of rates. And so that's a product and a niche that you can only access through a mortgage broker. And essentially, you'd be missing out on that just directly.
That's an interesting point. So an A lender could be even a monoline lender. Could be First National.
Absolutely.
Could be Vancity, for instance, or other credit unions.
Yeah. Monoline lenders are A lenders. They do have a B side. Some banks also have a B side. The public just doesn't usually get to know that because usually their underwriting will always try to approve something on the A side, and then sometimes they have their own internal B lenders that they've sort of farmed that out to. But yeah, like First National is an A lender, just like a bank. They have a B side called Excalibur. RMG has an A side. They have a B side called Eclipse. Like they all have A and B. And B lending, I'm sure we'll get to later in the questions, is more relating to equity lending, which again we'll talk about.
Right. So let's talk about the actual steps. So let's say, actually first, the steps, do they vary between working with a bank versus working with a mortgage broker?
Not a lot. I mean, the basic qualifying steps are largely the same with every lender because they're mostly mandated by the government for institutions in Canada that are federally regulated. So, there's an application process, whether that's online or that's a paper application. Most lenders and brokers and stuff now work on mostly digital applications. There's a consent to be able to allow us to pull your credit verify your ID. So there's some due diligence that's largely the same amongst everybody because it falls into the Bank Act and Privacy Act.
And you know what? There's a question that we always get asked. I'm sure you get asked as well, especially from first-time home buyers. Is what is the difference between they hear pre-approval and approval and firm approval?
Yes.
What are the differences?
Yeah. So it's really important to understand that a pre-approval doesn't actually mean approval. So the word approval in the term pre-approval is actually a little misleading. It's more, think of it as a pre-qualification. So the application you provide to us, your pay stub, your confirmation of down payment, your ID, that allows us to build your scenario. So we sort of map out what you qualify for, we work out what your maximum budget is, we work out roughly what kind of rates you're looking at, and then we submit that to a lender after we have a lot of sort of discovery conversations and educational conversations between us. We'll usually pick one or two lenders that we'll send that to, no more than that, because again, our goal is to protect your data and your privacy and your credit score.
Right.
But once we have that information, that lender will hold a rate for us. So it's called a rate hold, which will be held for up to 120 days. So that's 4 months. But it still requires due diligence once you find a property. So once you find a home and you've got an accepted offer, and hopefully you've got your subject to financing window in there, then that's the duration of time. We then still have to go through the due diligence of vetting your income, vetting your down payment, vetting your employer, and the bank vetting the property as well.
Right. And just to sort of interject here, so from our perspective as a real estate agent, when we're working with a client, the starting point is actually getting that pre-approval letter.
Yes.
It does double duty. Obviously, the biggest sort of advantage is actually having that rate hold. And it's going to be held typically between 90 to 120 days, like Reza mentioned, but it also gives you an idea of your budget as well. But again, we always, when we find a property, when we have an accepted offer, typically we have a subject to financing. And it's essentially us making sure that we're actually going to get the green light for the financing from the lender. So whether it be a bank or a credit union, we want to make sure that we get the green light and Reza gets you the green light, and we can proceed accordingly.
Exactly, absolutely, that's exactly it. And so, yeah, it's more of a pre-qualification with a rate hold attached to it, and it's just really important to understand that you still have to go through the due diligence process. But yes, the pre-approval certificate that you do receive from the lender, in most cases we get a written certificate, in some cases I just get an email.
Right.
But it does give a lot of sort of extra confidence, or at least some due diligence process has already been done when you're out there at an open house. If you're out there with your agent and there's 3 other people in the same unit looking at the same home on the same day, and I'm the seller, and I see one of you's got a pre-approval certificate and the other ones don't.
It shows that that person is actually serious, they're ready, they've got their ducks in a row.
They've got their ducks in a row, they've at least had a preliminary conversation with a lender. A lender's at least had their eyes on their documents.
Right. So it seems like we've got 2 steps. We've got the pre-approval process and we've got the actual approval process.
Yes.
How long do they typically take? Let's start with the pre-approval first.
Yeah, so the pre-approval, assuming your application comes in with your documents that we've asked for, we can turn that around in a day or so. We get the pre-approvals back pretty quickly. Most of our lenders will hold a rate very quickly. In the case,
you get done within a day or 2?
Yeah, absolutely, yeah. In the case of like First National, I often get it back within 4 hours if it's during the day.
Wow.
Yeah, so because they're not really underwriting anything, they're not fully vetting you at that stage. They're just taking a look at the application, the income, all the math makes sense on a hypothetical purchase, and they're just holding a rate and moving on to the next file.
Right.
And so it is generally quick to get the pre-approval. Now, once you've got the pre-approval and you get an accepted offer on a home, hopefully within that 120-day rate hold window, then that becomes the subject to financing timeline. And the standard subject to financing clause is typically 5 business days. In a market where we're in right now, which is relatively stable and quiet and tilted towards the buyer. At the moment, we're seeing that. Sometimes we're even seeing up to 2 weeks in some cases if the property's vacant or if the seller doesn't have immediate plans. In a market that's super hot, like the market we just came out of, we were not even seeing subject to financing clauses in contracts, which obviously is a risk and it makes our job a little harder. But at the end of the day, that was the market then, and that was just sort of reflective of what was going on.
Right. So everything essentially hinges on the market conditions.
Yes.
And even back then, like in a market that's really hot, there's always strategy and there's always ways of going around it to make sure that the client is protected, but they're actually able to secure that property as well.
Exactly.
So,
Yes. Yeah.
again, thank you so much for taking the time. Again, Reza, a wealth of knowledge. Lots of information that's really useful for the listeners here. If someone wanted to get a hold of you, how could they get a hold of you?
Absolutely. So I've got a few ways you can get a hold of me. You can call me at 778-229-4450, call or text. My website is sabourmortgages.com. My social is basically on Instagram as Sabour Mortgages, and on my website there's links to all my different social channels which you can contact me through. Whatever way is your preference is fine, as long as we get in touch, and I'm happy to help anyone who has questions.
Absolutely. And I'm going to leave a link to Reza's digital business card as well, so you can definitely reach out to him that way as well. So thank you so much for watching the video, and if you have any questions, make sure to leave them in the question or the comment section below, and we'll be able to address those questions.